Today, we delve into the most significant financial events shaping the global economy. From historic stock market milestones to corporate shifts in tech, these stories are vital for investors and analysts alike. Here are today's top 10 stories you need to know. In a surprising turn of events, a cybersecurity stock has hit record highs, rebounding strongly after a significant sell-off earlier in the year due to fears of AI disruption. This resurgence in stock price comes as investors regain confidence in the cybersecurity sector's resilience amid growing digital threats. The stock has broken through the $180 resistance level, and its relative strength index, RSI, is at a robust 75, indicating strong momentum. Analysts view this as a positive signal for the sector, suggesting a potential shift in investor sentiment towards cybersecurity as a critical area for growth. As digital vulnerabilities continue to rise, the demand for cybersecurity solutions is expected to increase, further supporting this upward trend in stock prices. Minneapolis Fed President Neel Kashkari has recently projected that there will be only one interest rate hike in 2026. This forecast comes as the Federal Reserve grapples with rising concerns over artificial intelligence investments and ongoing uncertainties surrounding the U.S.-Iran peace deal. The 10-year Treasury yield is experiencing upward pressure, which could significantly impact equity valuations. As the yield approaches a critical breakout above 4.5%, market participants are bracing for possible sell-offs, particularly in sectors sensitive to interest rates. This shift from previous dovish projections may temper market enthusiasm, especially for growth stocks that have thrived in a low-rate environment. Investors should prepare for potential market adjustments as the Fed's policy evolves in response to changing economic indicators. Looking ahead, the interplay between interest rates and inflation will be crucial in shaping investment strategies and overall market sentiment. Volkswagen is reportedly preparing for significant layoffs, with plans to cut up to 100,000 jobs, which equates to about 15% of its workforce. This drastic measure comes as the company grapples with rising costs and fierce competition in the electric vehicle sector. Traditionally a leader in the automotive industry, Volkswagen's stock has plummeted, nearing a 15-year low, as investors express concerns about its ability to adapt to the rapidly changing market. Currently, the stock is in a downtrend and is testing crucial support at $12. Should this level be breached, further declines could follow, compounding investor anxiety. The layoffs are part of a broader strategy to streamline operations and enhance profitability amid challenges in meeting electric vehicle demand. As Volkswagen navigates these turbulent waters, Q2 earnings will be critical to assess the impact of this restructuring on the company's financial health and market position. Stakeholders will closely monitor these developments in the coming months. SpaceX has made headlines by completing a record-breaking initial public offering, raising an astonishing $85.7 billion. This IPO has shattered trading volume records and has been hailed as a landmark achievement in the tech sector. Founded by Elon Musk in 2002, SpaceX has revolutionized space travel and aerospace technology, culminating in this unprecedented financial milestone. On its debut, the stock surged by 40%, breaking resistance at $150, which signals strong investor demand in high-growth technology. The success of this IPO indicates a robust appetite for tech investments, even as concerns about rising interest rates loom. Analysts believe that SpaceX's innovative projects, including Starship and satellite internet services, will drive future growth. The implications of this successful listing extend beyond the stock market, potentially influencing funding for other tech startups in the space industry. Looking ahead, investors will be keenly observing how SpaceX strategically deploys this capital to advance its ambitious goals, including Mars colonization and sustainable space exploration. Comcast has announced its decision to spin off NBCUniversal, a strategic move that has elicited positive reactions from both investors and analysts. This decision comes amid a rapidly changing media landscape, where companies are increasingly reassessing their portfolios to focus on core competencies. Deutsche Bank responded by upgrading Comcast stock to a buy rating, underscoring the anticipated value creation from the spin-off. Following the announcement, Comcast shares surged past the $25 resistance level, with trading volume increasing by 30%. Analysts predict that this spin-off could unlock between $5 to $7 billion in value, significantly enhancing Comcast's Q2 earnings outlook. The separation will allow Comcast to concentrate on its broadband and streaming services, which are vital growth areas. Such a focused strategy could enable the company to better navigate competitive pressures from industry rivals. Looking ahead, Comcast's commitment to innovation and efficiency could position it favorably in the evolving digital entertainment market, paving the way for sustained growth and shareholder value. MicroStrategy has announced a strategic pivot, planning to periodically sell Bitcoin to bolster its US dollar reserves and finance stock buybacks. This marks a significant departure from its previous HODL strategy, where the company consistently held onto its Bitcoin holdings as a long-term investment. Founded by CEO Michael Saylor, MicroStrategy has been a prominent player in the cryptocurrency space, accumulating substantial Bitcoin assets over the years. The stock is currently testing resistance at $1,1200, and a successful breakout could enhance investor confidence in MicroStrategy's approach. By selling Bitcoin, the company aims to stabilize its balance sheet amid Bitcoin's notorious volatility and the uncertain outlook on Federal Reserve rates. This shift could potentially improve the company's stock valuation and provide liquidity for strategic initiatives. Investors are closely monitoring how this change will impact MicroStrategy's financial health, especially as the cryptocurrency market continues to evolve with regulatory developments. Looking ahead, the company's ability to navigate this transition will be crucial in determining its long-term success and influence in the rapidly changing digital asset landscape. Tesla's stock experienced a remarkable surge of 10.5%, marking its best performance in over a year, following the announcement of a long-awaited update to its self-driving technology. This update is part of Tesla's ongoing effort to enhance its autopilot system, which has been a focal point of both innovation and regulatory scrutiny. The significant increase in stock value has seen it break above its 50-day moving average and is now testing critical resistance at $280. The Rising Relative Strength Index, RSI, indicates strong bullish momentum that could sustain this upward trend. Investors are closely monitoring Tesla's upcoming Q2 earnings report, as it will be vital to validate the impact of the technology update on future revenues. Analysts remain cautiously optimistic, suggesting that if the earnings meet or exceed expectations, it could further drive the stock price upward. The implications of this technology update extend beyond immediate financial gains, potentially enhancing Tesla's competitive edge in the electric vehicle market. With the earnings report approaching, investors are keenly assessing how this pivotal moment will shape Tesla's trajectory in the coming quarter. HSBC has issued a stark warning about potential pain trades in the second half of 2026, predicting increased volatility across global markets. This alert comes amid concerns over a steepening U.S. Treasury curve, which could signal significant shifts in investor sentiment. The financial institution anticipates an explosive rise in the U.S. dollar, a scenario that could lead to unexpected market swings, catching many investors off guard. As the 10-year Treasury yield approaches a critical breakout zone, analysts are particularly worried about the implications of it surpassing 4.5%. Such a development could severely impact equity valuations, leading to a reevaluation of investment strategies. Furthermore, a strengthening dollar may compel the Federal Reserve to reconsider its dovish stance, potentially resulting in interest rate hikes that would ripple through various sectors of the economy. This situation creates a challenging environment for investors, who must navigate the complexities of rising yields and currency fluctuations. As these dynamics unfold, market participants should prepare for heightened uncertainty, positioning themselves strategically to mitigate risks in the latter half of 2026. The coming months will be crucial for assessing these trends' long-term implications. The so-called Magnificent Seven tech stocks, which include industry titans like Apple, Microsoft, and Google, recently experienced a staggering setback, losing an astounding $2.3 trillion in market value. This dramatic decline has raised serious concerns about the long-term viability of massive investments in artificial intelligence, especially given the current climate of economic uncertainty. As these companies test a critical support level on the composite index, any further drop could signal deeper market corrections, reminiscent of prior tech downturns. Investors are now anxiously awaiting the upcoming Q2 earnings reports, which will provide crucial insights into whether these AI investments are yielding the expected returns. Analysts are advising a strategic shift, suggesting that investors might consider reallocating funds from tech-heavy portfolios to value stocks that demonstrate more stability and resilience in turbulent markets. The tech sector's ability to rebound from this slump will be closely scrutinized, as its performance directly impacts broader market trends. If the earnings reports reveal disappointing results, we could see a shift in investor sentiment, leading to increased volatility. Conversely, strong performance could restore confidence and stabilize the sector. In the coming weeks, the tech giants must navigate these challenges to regain investor trust. In a remarkable turn of events, the Dow Jones Industrial Average has closed above 52,000 for the first time in history, finishing at 52,263.29. This milestone was largely driven by significant gains in tech stocks, particularly Alphabet, which has seen a resurgence in market confidence due to strong quarterly earnings and innovative product launches. Additionally, a notable decrease in geopolitical tensions between the U.S. and Iran has contributed to a more favorable investment climate, easing fears of potential disruptions in global markets. The index's breakthrough through a long-standing resistance level signifies a bullish sentiment among investors, reflecting optimism about economic recovery. Notably, the Volatility Index, or VIX, has dipped to 16.91, suggesting a calmer market environment that encourages risk-taking. As we look ahead, analysts point to the Federal Reserve's recent indications of only one potential interest rate hike for 2026 as a key factor influencing market stability, allowing investors to focus on growth rather than monetary tightening. However, the question remains whether upcoming earnings reports can sustain this upward momentum. The coming weeks will be critical as investors closely monitor corporate earnings to gauge if this rally can continue. A strong earnings season could solidify the Dow's position, while any disappointments may lead to increased volatility and uncertainty in the markets. Thank you for tuning in to today's Financial News Roundup. Which story shocked you the most? Don't forget to like this video and subscribe for more updates.